Wall Street winners. It is Thursday, March the 14th, and we have just had the release of the U.S. Producer Price Index, or PPI, and it was higher than expected. But seems to be following the trend of CPI, the Consumer Price Index, and other things that other data points that have come out in the last, in this quarter, the first quarter of the year. And everything is pointing to the fact that inflation is extremely difficult to get back down to 2%. People are suggesting the Fed readjust their 2% rate to maybe 2.5% or 3%. There's been discussions on that for quite some time. But what we're seeing is the economy is actually fairly strong and robust, and that is causing prices to remain higher than anticipated. And a lot of that right now, in fact, is being driven by crude. So we can see here crude oil futures up over $80 right now. So 80.44 right now, 49, whatever it is, it's moving around, but 80 and a half, let's call it. And that's going to bode well for oil prices. So we've seen in the last couple of days that oil has done extremely well. Not utilities, so Con Ed is down, as you can see, but oil has done extremely well. If we look at the likes of Chevron, yesterday up $2 to almost 154. Valero at one point was almost $10 up. So it's now sitting up almost $8 at close and up $1-ish pre-market. So we're looking at close to 160. So this is something that back in January you could have picked up in the 120s. So this is a huge move in just one quarter, and these are the types of moves that I encourage you to keep an eye out for. And you don't have to day trade them or active trade them. You could buy this with the anticipation of it moving higher based on the trend the stock has and what oil is doing. And this would have been a great buy and hold, or you could have made even more profits if you had a bought and sold during the peaks in volatility. Because again, if we look at this, we'll use 6 months because we don't have a 3-month chart. But if you look at, even the 1 month, you can see there's a fair bit of volatility in here where the price doesn't just always go up, but it comes back down. Particularly look at the February 23rd date here. So if we look at February 23rd, we're seeing that the price obviously jumped up to like the 145, 146 range, and just a week prior was down at 135. And then a week prior to that was 139. So if you had taken profits at 142 and then held off for a little bit, you could have bought in here in the 135 range and then sold it anywhere all the way up to 145, knowing that that's kind of a peak. Hang on for a sale again and then pick it back up at, say, 139 and ride it again all the way up into the 140s. And I know if you're just watching this for the first time, you're thinking, oh, well, that's easy to say. It's all hindsight. But on a day-to-day chart and a week-to-week chart, you can see as well on the 5-day that there's still some buying opportunities. You just have to understand, I call it the envelope or the range that the stock is trading in. And there are typically highs and lows to that range, and you just want to be cognizant of those and then buy in when it's trending towards the lows, or when it's hit the low and it's starting to rebound is an even better time, if you can figure that out, of when to buy it. And then take your profits. You don't have to max out your profits on these gains. You can take a 1 or 2% profit, and again, if you can do that even 10 times a year, you're 10 to 20% for the year, which is a phenomenal return on an annualized basis. So you can keep your money in your capital in cash the majority of the time and then deploy it as you see opportunities arise. I mean, that is ultimately smart money management and very good active trading. So oils are going to do well today, I believe. I mean, who knows, but it looks like it. Crude's up almost $1 again. So it's up 90 cents pre-market. Markets are set to open in about 31 minutes. SLB, another favorite of ours. It's almost, it's 52 and a half. It's pushing $53 based on where it is pre-market. MRO up 77 cents yesterday. So this was a stock, again, trading in a range earlier this year, January, February, of 20, even 19 to $23. And now we're at almost 26, or should be at $26 today, the low 26s. CVE, another one that a few months ago was at $19, is now close to $25. So lots of movement here. The same with Exxon. Exxon was trading in a range of 99 to 104, and we're seeing it push 109, maybe 110 today. So I'd mentioned this about a month ago. I expected this post earnings, which have come out now, to get up into the low to mid teens. And that's where I might consider taking some profit on this. So we're getting there. It's trending upwards. If we move down to tech, so right now at pre-market open, we're seeing the we're seeing the futures for the Dow, S&P, and NASDAQ were in the green going into this, but I believe they may have just flipped into the red. But either way, we can see some green on the screen here. So Palo Alto, one of the ones we've been following closely recently, up pre-market $1.64. Again, the pre-market numbers don't necessarily reflect reality, but show that there's a positive interest versus a negative interest more than anything. And these could flip the other way at open. So don't hedge your bets on these, but they could be part of your decision-making criteria. So this stock yesterday was down at 282. It closed at 290. So lots of movement there. I exited my position in that, probably a little too early, but it took a nice little percentage profit and was very happy with that. We're seeing some uptick in Microsoft. So Microsoft, definitely a strong company, a strong stock, something that you could hold forever and probably do very well. It doesn't have the same type of movements as some of the other tech stocks, but pre-market up $3. This was down as low as, I think, 403 the other day. So if we just look at the 5-day chart here, you can see that there's been some pretty significant movements. In 5 days, it was down as low as 401, 402 in that range, and now it's up 415 to it's up $13 in the 415 range, and potentially up $3 at open. So that's a good little percentage return in less than 5 days. ARM is an interesting one. So I believe ARM just allowed employees to exercise their options post IPO on Tuesday. So I'm keeping an eye on ARM simply from a volatility perspective and trying to identify if we're seeing a lot of employees go to market and sell some of their stocks. So if we go into the chart on ARM, we can see at the bottom of that chart, which just disappeared, you can see the volatility of that. And I'm not able to, let's see if I can get that to come back up. Anyway, you can see the volatility at the bottom of that. Let's scroll right to this thing is just not adjusting for some reason. So technical glitches here. But you can see the volatility at the bottom typically, and maybe on a computer monitor it would be easier to see than on a cell phone. So this is one that, again, if it drops into the high teens, then I would pick it up. So if it was 118, 119, if it does experience a pullback, which I anticipate it will, I think it has a lot of future prospects, and I would look at maybe adding that to the portfolio. AMD was down significantly yesterday, which was part of really a bit of a semiconductor readjustment more than anything. We saw the same thing yesterday with NVIDIA. However, it presented a great buying opportunity. So if we look at NVIDIA yesterday, this thing fell off the map a bit, and I believe it opened around 419, 415, and then it dropped down into the 888, 889, maybe lower than that into the 886 range. And then it started to course correct throughout the day. So if we look at that one day, well, it doesn't have yesterday's on there, it's already in pre-market, but it is down pre-market. And so we're down in around the 891 range. This is probably where you can see it setting the bottom. Hopefully it's setting the bottom for the day around 890. So if you can get into this in the low 890s, there's a a likelihood that it comes back up to or exceeds the 908 and maybe gets up to 919. So this is an opportunity to expose yourself to some risk, but on the same time, some upside on the volatility that this stock has. And again, I think this is a good long-term stock. It has a great future earnings guidance, and it has a monopoly in this AI space. So that's what we're seeing there, and that's what I'm taking a look at today. If we go down and close out with financials, I'm not really doing much here, following much here. These are moving a little bit up and down in various ways, but until we get closer to their earnings release and next week's Fed announcement about potential rate cuts, I'm not anticipating a great deal of movement in those. The other one I did want to mention in tech is Google. I do love this company. I think it has it is undervalued right now at 140.77. It is up 98 cents pre-market. I was buying in and out of this yesterday, and I think it's a great stock with less volatility and risk than, say, an NVIDIA, but still enough to give you a 1 to 2% gain in a day. And then lastly, I don't want to forget this, after market close today, Adobe. So Adobe is set to release earnings today. I anticipate that the earnings will be positive and this thing should shoot up. I'm thinking 3 to 5, maybe 8%, depending on how good the earnings are. If they certainly exceed expectations, then we should see this thing rebound, because it did take a bit of a hit, well, a pretty significant hit in the last month due to OpenAI's release of Sora and its ability to create text to audio videos through AI automation. So it's pretty miraculous what Sora can do, but its impact has yet to be seen really on Adobe and other stocks in that film editing and creative design space. So we'll see what those numbers come back like today at end of close. So I wish you best of luck today. If you like these videos, follow the channel, send some comments, let me know what you'd like me to cover, and I wish you all the best.